Anand Tandon as well joins in from JRG Securities to talk about his version of what the markets have been up to so far. Anand, morning. It's been a volatile session for the market, or many sessions actually. Do you think this pullback could extend itself further, or you're not convinced?
It depends on the time frame and the extent of the pullback. I think near term, probably the markets were a little oversold, so you can expect that the pullback will last a few more sessions perhaps. But can it really run away to anything big? I don't think so.
How do you see the next few weeks, Anand? I mean, not just what happens next 7 days or 10 days, but if you just look between now and the union budget, do you think the kind of turbulence we've seen in the market will remain and we'll go back and retest or maybe even break the kind of levels from which we've been bouncing back?
It's possible then. I think the conventional wisdom that now seems to be making its way in the market is that emerging markets will be somewhat of an underperformer, that the US, which is showing signs of recovery, will actually attract money back, and therefore on a relative basis the money flow will continue to be out of emerging markets. And in a market scenario like that, unless the government, for example, pushes back some of its IPO plans or disinvestment plans, you could have fairly significant pressure on the domestic market. Local money is not likely to be rushing in, even though this is a season for insurance money to start coming into the market, and therefore to some extent at least the domestic institutional flows may be better. But on the retail side, I think you'll find that people are a little circumspect after the spate of news that we've had, which has not been very good for the corporate sector in India.
So what worries you more? Is it that globally speaking, relatively the liquidity picture will be dim, or are you worried about the negative news flow which has hit the market and you see that continuing through the next few weeks?
I think the negative news flow is only is important, but not very much, because all said and done, if the flow was to reverse, the market has many followers and very few leaders. So if there was actually money coming into the system, I think the local investors will also come back to the market. However, the question is what will determine the international flows, and we are in a market which is reasonably fully priced, if not marginally overpriced, where the interest rate, I believe, will continue to be hardening from here, where the credit growth is being very high, and therefore already there is pressure on liquidity in the domestic banking sector, and where the foreign money, as I said, on a relative basis should find India a little less attractive than many of the other markets, especially their own. So all in all, I think there is a cap on the upside from the market from here.
So for the longer term then, if one had a longer term outlook on the market, do you think it's the time now to find value in spaces that have corrected a lot?
On a trading basis, yes. I think especially some of these scam-tainted banks, some of the construction companies and so on, are companies I would look at for investments. Not only, but predominantly for the fact that it will be business as usual going forward again, and therefore you are expecting that any sharp fall or sell-off because of the recent panic gives you a buying opportunity. That said, whether those are very robust business models is something that we have to re-examine, but I think that holds for a large part of Indian corporate sector as well.
There are a couple of domestic factors, Johan, and one is the fact that we're getting into an earnings season. How would you read that to improve the contours of our market? And we have the macroeconomic data that has been improving both in terms of IIP and now in terms of receding of inflation. How would you put both of these domestic triggers and factor it into our markets?
I think the domestic economic figures this year are a strange bunch. I think because of the fact that we've changed the base at which we are accounting for inflation and a few of the other economic numbers, we are having very sharp jumps in numbers coming through, and therefore it makes some of those numbers, to my mind, fairly suspect. You have 100% growth in a revision. It doesn't give you too much comfort. That said, the earnings, I don't think that we are looking at any surprise in earnings from here on. I still maintain that we will probably underachieve the consensus number of 1,050 on the Sensex, and especially now that the oil prices have started to go up and inflation finally is a concern. Therefore, I'm still assuming that the ability to reprice diesel is somewhat limited. Consequently, the places where most of the money was made in the last quarter, which was let's say banking, because they were not reporting their NPAs, oil and gas, and auto. Of these, only auto has a real business. Now, with steel prices looking like they may harden, I think there will be some margin pressures there. So I don't think earnings surprise is something that I would be betting on. You may actually have some negative surprises, especially in the banking sector, given that the NIMs are likely to be under pressure for the next 6 months or so.
And then if you believe as well that the market is oversold and can pull back a little bit more, where would you seek leadership in this market? Because banks are no longer leading the Nifty, commodities are up and down. What's your favorite horse to lead the market a bit higher?
Well, seasonally, construction should be a good area to be in. Monsoons are over, new business will start, and hopefully the government will be spending some money. As you are aware, government spend has been actually behind the curve in terms of their budgets. So, some of those should get released. I would imagine utilities could be another space, especially, and perhaps even the utility suppliers, because again, because of the government spend, you would expect to see that the last quarter will do very well. Commodities, again, as you mentioned, are perhaps a bit of a strong point right now, especially metals and maybe Hindalco in particular.